Lesson 5 in section 1 is currency correlations. So currency correlations and the impact on the trading decisions. For example, I like to use the dollar, the DXY, and understand the Euro USD, how the chart's going to move, as well as when I'm trading the E-mini S&P 500. I use them all together to understand kind of the flow of the market and what's going to happen. Now we'll show you in the charts in a little bit, but let's break this slide down before we move into the charts for examples. So a positive correlation is when two pairs usually move in the same direction. For example, that euro dollar and the pound dollar, they usually move in the same direction. Not exact pip to pip, but the general flow of the markets are going to be the same. If one starts going down while the other one goes up, that's a hint, a signal to you. Be cautious. Something's going to change, and that's something on the advanced trading will teach you guys, but a little tip for you guys to research if you're a little more advanced and not just a completely new trader. A negative correlation is something going opposite. So usually the euro JPY is going up and the euro dollar is going down. And for me, that dollar, the DXY, is going up. E-mini S&P is going down. Euro dollar is going down. And then you got neutral pairs, which they really don't have relationships with each other. And that would be, for example, the USD and the Swiss versus the pound and the yen. Now, understanding these correlations is really helpful and something I reference every single day in my trading. It is something a little more advanced, but as we're building that foundation, I want to get you understanding everything that it takes to become a trader, and it's not just using indicators. There's a lot more to going into trading and being comfortable and consistent as a trader. And if you're going to be one that trades multiple pairs, it's good to not go against negative correlated pairs and buy both, because you're going to lose one and you're going to win one, and you're just washing your money out. So you want to be aware of this, pick the stronger one and figure out which one you're going to use and take that position. That is the smart way of trading, but the even smarter way of trading is only trading one pair. There's tons of markets to choose from, and each market is going to have tons of opportunity for you to make money day after day. So you don't need a bunch of pairs unless you're going to be a swing trader or a long-term trader. Then you're going to want to reference a lot of pairs and figure out where your setup is. But on a day-to-day, week-to-week, one pair is more than enough when getting started. And even a lot of great traders only use one pair because you don't want to get lost in the data. You want to focus, become sharp at one thing, get your money, get out, and go enjoy your day. Because that's what we're doing here at trading. You want to make your money. You want to be financially free. You want to have free time. So go enjoy it. Don't waste time pulling all this data in, trading all these currencies, trying to trade all day long. Let's get our money. Let's get out. Let's have a plan. And I'll help you along the way through these courses, develop that plan. So diving into the charts now, let's look at how you could do correlated pairs and how you see them live time. So there's a few ways of doing it. If you're paying for TradingView, you could do split charts here and you could watch them side by side. Something like this. Let me go on a higher time frame for us. And you can see I got the E-mini S&P 500, NASDAQ, and the Dow Jones. I only trade this, but I'm watching how the other markets are working, and I'll see how that dollar's dropping and these markets are going up. That is how you want to use this. Now, if you're not able to do split charts, what you can do, let's go to the ES1, so the E-mini, and we want to add the dollar on here so we could see. Let's go to like the 1 hour, 4 hour. Now we add in the DXY. So now you could see how they're working with each other. So you could see the dollar looks like it's going to tank. Why do I think that? Well, a few reasons. Could be a fake out from the E-mini running up. You see how these swings. This went lower. This did not go higher, right? Then it went above it. This went below it, so we're fine. Then it ripped above this point. It hasn't gone below that point yet. So we could look for this, or maybe the dollar's getting stronger, and this was to grab liquidity, and this is going down. I know this is a little advanced, but I just kind of want to get you thinking about how to start using this and give you a live example of correlated markets and how you could use them. They're not a safe place. You can't guarantee it. Like I said, I just gave you two different scenarios. So you're going to want to watch it and see what happens.